In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Welcome, everybody. Merrill Chandler here, your host of the Get Fundable podcast. Now, today, this episode, we're going to be talking about some interesting tactics and strategies that are being used by one credit bureau and by FICO to create a more inclusive credit score. But that credit score, the question we're going to ask is, does that make you more fundable? So when we come back, we're going to take a look at a couple of UltraFICO that is offered by FICO.com, FICO, and we're going to be talking about Experian Boost, which is offered by Experian but uses FICO. So we'll get to you in just a moment. I'll see you in a second. Welcome back, everybody. Merrill Chandler here. Today, we're talking about what appears to be an awesome opportunity for one credit bureau. So far, it's only one credit bureau, and FICO to bring more people on board the FICO universe and make your credit score go up. Now, before we start this, I want us to be clear that I've been teaching in every single one of our podcasts. You've been learning for all of you bingers out there, that we don't care about the score if it doesn't make me more fundable, right? So those are the glasses we're going to be using to filter this information. Does it make me more fundable? So I'm going to share my screen right now, and we're going to go through this to show you line by line what they're referring to and what we can do about it. So here we go. Share the screen, and we're going to share the computer audio as well. Let's go. All right. First and foremost, let's take a look at what this is saying. Experian is saying, guess what? I'm going to move that out of the way. Experian say only Experian can raise your FICO score instantly. Now, some of you guys already see the problem here. How many scores are they talking about? They're talking about one score. Only Experian can raise your FICO score instantly. Now, the funny thing is that this score, what's called Experian Boost, notice they say right here in the middle, get credit for your phone and utility bills. New credit scores take effect immediately, and it includes free Experian credit report plus a FICO score. Now, I'm gonna take this out a little, because I think I just muted myself. Unmute myself. There we go. So we're gonna take this out of full screen mode, because you guys need to see kind of what this is looking like, and I want to be able to point it out with my mouse. There we go. All right. Notice, get credit for your phone and utility bills. New credit scores take effect immediately, and Experian credit report plus a FICO score. Now, when you get a free FICO score with a credit report, what FICO score do you get? You get the open access free, what we call the FICO, right? It's the one that you're going to get from Bank of America and the one you're going to get from Wells Fargo or your credit union. It's the marketing score. It is not an actionable score that an auto dealer is going to look at, that a mortgage broker is going to look at, that your unsecured credit cards, business credit lines, etc., are going to use. So let's take a look at what they're saying. FICO score 8. Notice FICO score 8 is the most popular of the marketing scores. And if it's only Experian, then is that a problem? Is that good news or bad news? Because if it's only Experian that's quote unquote raising your FICO score, then that means they're not using TransUnion data and they're not using Equifax data. So it's not helping. They're marketing to people who are unaware. Now, if you're this far in the podcast, guys, now this may be your first one, but for most of us, if we've listened to more than one of these podcasts, you're already in the know. You got the insider secrets down. This is now we're putting on our glasses to filter the advertising, to suss out the facts here. All right. Now notice, because everybody's been sued at one time or another for all this, let's read the fine print. Credit score calculated based on FICO Score 8 model. Your lender or insurer may use a different FICO score than FICO 8 or another type of score altogether. Does that make sense? They're giving us the exact same disclaimer data saying your FICO 8 model is and this is just my thought. It doesn't say it here, but it's everywhere else. It's always been true that this is the unweighted FICO 8 marketing score. It is not a score that's based on the lender industry specific scores that we've discussed in previous episodes of the podcast. So notice, if you subscribe to Experian Boost, it's going to allow you to get credit for your phone and utility bills. That's what it's putting in there. Now, what did we say when we talked about business credit reporting? There was eCredible, there's other outfits out there that literally say, we can improve your business credit using your phone bill, your utilities, your cable, etc. Is Chase going to give you a $50,000 business line of credit based on your phone and utility bill reputation? Now, I'm going to say no. And so far, nobody has countered this. Nobody from FICO's called up and said, Merrill, nobody from Experian called up and said, hey, Merrill, you know what? You may want to correct this because guess what? Lenders, auto dealers are using this score all the time. Because they're not. All right. So let's take now. Notice they're saying, look at all the points that are being boosted. Right. Experian Boost is creating all these things. Austin, Texas, 15 points. But notice they're selling score, not fundability. How many times have I said, let's dangle that shiny object in front of the borrowers so that they don't know what we're actually measuring, right? So and now that they tell the truth, 90% of lenders want to see FICO scores. Of course they do. But we want to know that Experian, TransUnion, Equifax are all using the same data, right? FICO scores present a bigger picture, right? You need 6 months of credit history to get a FICO score. That is true. But is a lender going to, just because you have a few months or even a few years of data on your utility payments, are they going to give you a $20,000 credit card, business line of credit, etc.? So we want, just notice that they're framing everything in the terms of score, not fundability, not access to capital, not approvals for the types of credit that we're always looking for: business lines of credit, business loans, commercial loans, etc. Now, raise your FICO score. Guess what? They're talking. This is the truth. You just don't know that it's true until we dissect this whole thing, right? Because it's Experian data and it's the FICO 8. That is one score. The problem is the entire universe of scores is being ignored. Now, let's so connect your bank accounts and use to pay your bills. Choose and verify the positive payment history you want to add to your file. Now, remember when we were talking about the business and we said, hey, these business accounts are letting me pick my positive payment history. What about negative payment? I'm late on my apartment, on my rent, or I'm late on my cell phone, but my electric bill is always on time. So notice they're saying when you choose here, they're using electric company as a positive payment history. But I stand by what I said in business reporting. I stand by it when it comes to Experian Boost or anything else. If you get to choose it, it's not going to help your fundability. Never has. I'm assuming it makes sense to me that it never will, because you're skewing the picture. You get to choose and verify the positive payment history you want to add to your credit profile, and then what your scores boost immediately. So they're selling there. So notice, here we go. Your water bill, your electric bill, your utilities, your cell phone. And unlike credit repair companies, now this is true, Experian Boost is free, but what good does it do? And now I can't know this. I can't know this yet, and it's on my docket for my conversations with FICO. But so far, total transparency, I do not know the answer to this question. But but what we need to understand is that if it's only one score and if it's only one bureau, then is it really, does it have any impact whatsoever? I mean, they're just selling a score. And if it goes up, then Experian score is, if you subscribe, Experian score is going to go higher and create more range between your Equifax and your TransUnion. And what does that mean? If there's too much diversity, then automatic underwriting is going to throw you out into manual underwriting so some human being can check the data points. I promise you, Chase Business is a commercial loan for your next multifamily is not going to look at your Experian Boost, the Experian data boosting your FICO score. All right. Now, Credit Karma, first of all, it's a FICO score. So this supports everything that I've ever said. Experian is legit, but there's no TransUnion and Equifax yet. Even if it does Experian and Equifax, it's not going to help because it's not like kind lending, right? Your utility bill and a $50,000 business credit card or even a regular credit card is not going to have a significant impact. So get credit for your phone and utility bills, raise your FICO score, and you get a free Experian credit file. All right. Now, that's it for Experian Boost. So top to bottom, Experian Boost is simply a FICO score, a strategic alliance, a joint development between FICO and your Experian to add additional data points that are trying to bring in more people and teach them about scores. Now, I'm not against anybody learning how to improve their credit scores as long as you aren't interested in fundability. If you're not interested in fundability, then your score is like any other trophy, right? Great, it sits up on the shelf. But if you're interested in your score reflecting a profile that lenders will lend to, then Experian Boost is another marketing ploy that is it's leveraging new and exciting technology that doesn't ultimately help your fundability. All right, so I'm going to move this one out of the way, and I'm going to bring over. Let's go to chapter 2 in this episode about another Experian / FICO relationship called UltraFICO. Now, let's go over here and let's take a look at what this is. And there, when I was doing the research, making sure I had crossed my T's and dotted my I's, wanted to make sure that I was represented because you guys know through and through, I'm a fan of FICO, love FICO. And FICO is straight up honest in what it's teaching here, what it's offering here. It raises your score. but it raises your score using data that lenders are already getting from other places because it's part of the lending underwriter software. And let's go through that right now. So great picture, lots of people living their lives. How do we have this much fun? Well, we need to increase our score now. So your data, your UltraFICO score, you are in control. You can, notice it says you can unlock more credit opportunities for hardworking people. Absolutely. You empower your FICO score by simply linking your checking, savings, money market accounts. They want to know that you have how much traffic, and we've talked about traffic, so traffic is important, but lender software that's going to approve you is looking at your traffic. That's through early warning systems or early warning services. There are other databases that we've talked about in the boot camp, in my book, that are monitoring those things. All they're saying is throw those checking accounts, savings, and money market accounts into your score, and we can raise your score. But let's look in. You have to opt in, right? And they're addressing 7 out of 10 people have recently kept positive balances on their accounts. They could see a higher score than their traditional credit score, right? Some people don't even have enough credit history to generate a FICO score. Guys, if you don't have a credit history, you're not going to get lending. So we need to build a profile that is a fundable profile. Remember the 3 pillars of fundability: a qualified fundable borrower profile, your personal profile, a qualified fundable entity, and the borrower behaviors that build relationships with lending institutions that trigger all the positive results that a lender wants to lend to you. So if you don't have a credit history that does that, then getting your bank account information is not going to help. They can already, the early warning services that banks subscribe to already have this information. It's just not calculated in your FICO, as we learn here, another FICO 8 unweighted FICO score. It actually impacts your lender score. So we want to do what impacts positively our fundability. So how it works is with FICO Ultra, you're empowered to leverage your checking and savings account to add to it. Just sign up, and what it does is it checks out the length of time your accounts have been open. Already, there are other databases that lender software uses to do exactly that. Then the recency and frequency of your banking transactions. So what do we call that, guys? Traffic, right? Dollars in, dollars out, etc. If evidence of consistent cash on hand, that's your average daily balance. For my students and clients out there, those of you who've been to the boot camp, you know what they're looking for in that bank grading system, right? And then, whoa, let's go back. There we are. And a history of positive account balances. Again, from the boot camp, from my book, where we need to stay away in every way and keep positive balances and never go into the non-sufficient funds or go below zero or use our check guarantee credit lines because we're not going to get positive juju from that. Now, cool thing is FICO, UltraFICO is measuring all this, but it's measuring it to add to or create or add to a score. The thing is FICO's not the one who cares about this. Lenders are lending on this. Remember how I said FICO, in its own words, is in charge of rate and term, and maybe in many cases the limit or loan amount. That's what the FICO score does for you, not the approval. But all of these things that we're reviewing on this page, every one of those is the one that's taking care of that. So I want to make sure that we are all in play here. All right. So they're just now you have to opt in, and then they're collecting the data. Now let's take a look at who else is involved in this process. right? See where it can take you. Trust FICO. Here are the participants. The joint venture. It's a joint financial institution inclusion partnership of FICO, FinTech Pioneer Finicity, and the global leader in consumer credit reporting, Experian. No mention of Equifax, no mention of TransUnion. So that means that if you did opt in, it's not going to matter, but you're going to have a differential, and your score range between your highest and lowest score is going to increase. Remember, I say I don't care if you save 0.5% on a credit on an auto loan from a credit union. If that credit union only reports to one bureau, it's ultimately going to damage your profile, right? So in my world, I'm going to teach you, I'm going to support you in doing what you need to do to take care of your family, your loved ones, etc. Because ultimately cash is king, and we got to take care of that nest egg. But if you're asking me what to do, I'm going to tell you that 0.5% savings by going to a small credit union is not worth a single penny of the savings, because it's going to cause a difference in range. And we want to get down to that 0 to 5 points, max 0 to 10 point difference between the highest and lowest scores. Signing up here, Experian is literally going to be the only thing that's affected. And as I've shared with you, it's affected negatively because both with Experian Boost and UltraFICO, I don't know this, but I'm gonna share it with you anyway, because half of fundability optimization started out as me connecting dots, and then it got proven and proven and proven, both in a client experience, student experience, and from FICO itself. So I'm good. It's not going out on a limb. The entire thing that you have learned started out with intuition, connecting dots, and seeing patterns. I'm going to tell you right now that this is marketing to build more trust in scores, so that when they become, and remember, I'm down the single mom in Louisiana, right? And the hardworking steel worker in West Virginia. I'm not saying they don't deserve to have a good credit score. I'm saying that let's empower them with scores that are going to get them their first home, get them their first car, get them their first credit card. Because right now, I am not aware, other than FinTech Pioneer Finicity, I'm unaware of how Experian Boost and how UltraFICO are actually being used by lenders. The lenders that I work with, the lenders I interview, and the folks that I'm in touch with in everything that I'm doing, not one of them have use FICO, UltraFICO, or Experian Boost as part of their underwriting guidelines. I'm going to go with what puts money in your pocket so you can grow your business and create time and money freedom. Nothing else. So that's it, guys. That's your deep dive. Notice both of them both of these Boost and UltraFICO use Experian data. There are no plans in my research. There are no plans on how to expand that, because that takes away some of the reason why Experian got in there, is they want to use their data and create more opportunity there. Maybe there's a sunset clause on that deal, so after a year or two, the other bureaus can come in. But all I know is that FICO is out to sell scores, but lenders approve funding. So how many times have you heard me say it in the different episodes that we've done? Just like detectives in a good detective show, a murder mystery, follow the money. Well, here, follow the payoff. Who's selling and why? And while I love FICO, God bless them for making things broader to build score and awareness of the importance of a good credit profile. but not once in there did any of Experian's language or any of FICO's language talk about building use this as a stepping stone to build a better profile that lenders will lend to. They're being inclusive, but they're not educating these susceptible borrowers, these folks who don't know the difference between fundability and scores yet. They're creating an illusion that this score they're not saying it, but borrowers, I guarantee you, are saying, "Oh, if I can get a better score, I can get a car, or I can get a mortgage." And there will not be a Fannie Freddie mortgage in the near future that will ever use these scores as part of their funding. So when that becomes different, if you guys find something different, I'm willing to be wrong. Some of this stuff I want to be wrong, because I want there to be major social responsibility from the people who are in charge of this. I want there to be more for all of us, guys. And I want our lending partners and our FICO scoring partners to educate us across the board about all of it. And so far, you and I are left to ourselves to do the math, observe the results, and see what's actually happening out there. So I love that they took on Credit Karma. I love that they took on Credit Karma. And that's kind of the free boost that they're doing to get this free score to help, and still use a FICO, but it's a FICO score. If that FICO 8, it's not an auto score, it's not a mortgage score, and it's not a unsecured bank card score. So that we're sure of. You guys, I love it when you join me. Keep binging. Keep committed to your the power you have to make a difference in the lives of your circle. Educate them. Share this podcast. Share this everywhere you can, so people know what to watch for. This is Merrill Chandler, and in fact, in every way, I want you guys to be fundable, but more importantly, I want you to be able to educate and show up for your loved ones in a way that will help them stop stepping on the funding landmines. I want them to be fundable, and you and I are going to get fundable together. Fair enough? You guys have a spectacular day. This is Merrill Chandler, your host of the Get Fundable podcast. And once again, we're knocking it out of the park. Be well.
Thank you for listening to the Get Fundable podcast. Please leave comments, because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast, because we want them to get fundable too.